The silver squeeze is on as the white knight rides amid a global shortage that has already taken silver prices up 70% on the year, crossing $52 an ounce for the first time in history. Is it time to melt the silverware? After surging 27% in just 2 months, last week silver hit something called backwardation, which is when it's in such short supply that the current price is above its future price. That is not normal. In fact, silver only went backward for one single day between the 1930s, when silver futures were normalized, and the 2008 crisis. That was in 1980 when the notorious Hunt brothers tried to corner the silver market, failed spectacularly, and set off a mini financial panic. But since the 2008 crisis, silver has gone backwards 4 times. That's roughly once every 4 years. In case you're curious, gold also had just 2 backward days between the 30s and 2008, and it's also gone backwards 4 times since then, suggesting our financial system is now systemically unstable, as in maybe you should buy some silver or gold. What's driving the silver squeeze and gold's gallop is the so-called debasement trade, where ballooning government debt is driving both inflation and default concerns. That's driven a flood of new money into gold and silver ETFs. Both gained about 30% on the year in terms of new money. But silver gets an extra boost from massive demand for industrial silver in AI data centers, solar panels, and electric vehicles. Given AI alone now accounts for 1/5 of the stock market, that's a lot of chips to feed. All this demand is crashing into historically tight supply, with above-ground physical silver inventories down almost 20% since 2021, despite soaring demand. This is driving annualized silver borrowing rates past 30% in London. That's by far the highest in history. Normally, interest rates are just around 4%. Now, usually the pressure valve on silver and gold is expand mining, but silver mining has actually been stagnant since 2019. This is because most silver mining is a byproduct of industrial mining like copper or zinc, where there's falling Chinese demand as their economy slowed first in COVID and now in the trade war. So it's next brought to you by I Trust Capital. Silver is famously volatile, about twice the stock market and 3 times gold. In fact, in the past year, silver has been half as volatile as Bitcoin. As for what's next, previous episodes of silver backwardation have been a mixed bag. Twice, it kept rallying, rising 52% in 2008 and 79% in COVID. Twice it crashed, dropping 60% in the 1980 Hunt brothers corner and 23% in a random 2021 meme frenzy. And the last time in 2011, it zigzagged, coming out even 12 months later. So who knows, but big picture, the debasement trade will keep boosting silver, along with gold and Bitcoin, while the extra boost silver is getting from the AI bubble probably has room to run, suggesting silver volatility isn't going away and gold could be next. Okay, we'll be watching. See you next time.